Welcome to Subramani. I'm going to talk to you about a concept called tax loss harvesting. This is not a word which is used much in India, so you will find very little literature except Aarti Krishnan has written something about it. If there are others, I have not read it. So, what is tax loss harvesting? It is the practice of selling off your shares and just buying it back again just to book your losses. So let's say you bought a share at 100 rupees, the price falls to 70 rupees and you think you still want to buy it. You're not in the mood to sell it off. You're not a trader, you're an investor, and you think that you will want to buy more of it at 70 rather than get rid of it. So there are two ways of you can do it. You sell off the share at 70 rupees and you buy it back at 70 rupees, right? So you have what you have done is you booked your 30 rupee loss. In your books it will appear as a short term capital loss if it is less than 1 year, and it will appear as long term capital loss if it is more than 1 year. This can be used for setting off against any other potential gains that you have. So if you were booking profits and losses, this will help. So the one way of doing it is selling it off on a Monday and buying it back on a Tuesday. Please don't buy it back on the same day, because let's say you sell it off at 70 rupees and the price falls even further and you cover it at 68 rupees. You made 2000 rupees gain. Yes, but the problem is that only that gain of 2000 rupees will be called speculative gain, and your original capital loss which you wanted from 100 to 70 may be a little dicey to get it. You may not be able to get it. So best is to sell on a Monday and buy on a Tuesday if you want, or even better, sell in your account and buy it in your wife's account or in your son's account or in your HUF account. Ultimately the loss remains within the house and the profit in the shares remain within the house. That is assuming that you want to hold on to the shares. Now there are 2-3 things for you to be careful about. One, you may actually want to get rid of the share if you're a trader. If you're a trader, you're not really, you would have a stop loss of maybe at 90 you would have got off, right? So you would have anyway booked your losses. But as an investor, you may decide that you will buy more of it because you bought it at 100, you bought it at 70, then you bought again at say 65, and then you bought again at 85, and now the price is 125. What has happened is you bought more and more on the way down, on the way up, and built your position. So you're in a building your position stage and you still have a positive view on the company. Let's say you have a positive view that it will do well after a period of time. At least you booked your profit and you are holding on to the share still. What is the problem? What are the disadvantages of doing this? First of all, you should know that you really want to hold on to that share. Otherwise, it's not worth it. If you are holding on from 100 to 70, then 70 to 35, that's not what we are saying. You should be very clear that you want to hold on to that position. If you are not sure about that, then just get rid of it. Like if I bought a share at 100 rupees and I may have a stop loss of 80 rupees, right? So at 80 rupees, even as an investor, I may rethink and redo and talk to people and then take a decision to just sell it off. Then it is not tax loss harvesting. Then it is of course booking your losses, right? We don't have very easily, we don't book our losses, right? So that way it helps to overcome one big bias of saying no, I can't be wrong and things like that. You are not wrong when you're booking your losses. You were wrong when you were buying the share, right? So when you bought the share, you decided that you will hold on, you will invest in it permanently, you will wait for the price to reach 1000 before you sell. However, the prices fell. So here it helps that you book your losses, and that's it. Either you book it yourself or you book it in your some other account within the family, and these are the two things that you can do. Should you do it at the end? Should you do it in March? I don't think so. You should be doing it anyway continuously throughout the year, right? So every year the market fluctuates at least 10-15%, right? It will go up, it will go down. At least the share which you hold will go up and go down. So this is a good chance for you to do. However, tax harvesting may not work in shares which you are doing as an SIP, because that can be very confusing for you. If you have decided to buy, say, an X share every month, and you said that's how your SIP is going to work, then tax loss harvesting, you will have to be careful how it works. You have to do decent accounting, because The method which the income tax department uses is FIFO. So your FIFO will continue to happen. So somewhere where you are able to get long-term capital gain, you could be getting short-term capital gain. So be very careful as to what you are doing, right? So you may have bought the share at a low price. Let's say you bought it at 70, then you bought it at 80, then you bought it at 90, then you bought it at 100, and now the price has fallen down to 75. When you try selling it at 75, you will end up paying 5 rupees tax. You will not get your loss to be booked. There is nothing called average because FIFO works. So the income tax department will say, okay, you bought it at 70, you sold it at 75, so there is 5 rupees short-term capital gain. You think that you bought at 100 and you sold at 70, so you have a 30 rupee short-term capital loss. That's not how it works. It works FIFO. So the first share you bought at 70, now you're selling at 75, so you will end up paying 5 rupees gain. So be careful about that. Be also careful about multiple dates purchase and multiple date sales. That is a little tricky. You have to apply FIFO. So, second, don't buy and sell on the same day, or don't sell and buy on the same day, simply because it will be treated as treated as speculation loss, and you won't be able to. The purpose of doing this will be defeated. Also remember that if you are paying a lot of brokerage, there are still people paying high brokerage, then that brokerage also can be an impediment for doing this. So be careful about what you are doing, and that's it. It works. Thank you.